On Friday, biggest IPO in the history of Wall Street happened. Markets closed green. Everyone is feeling good. And almost nobody noticed the two things quietly happening in the background that could flip this entire market before summer is over. But don't worry, I'm going to show you exactly what those two things are and what to actually do about it. Welcome back to the Investing Guideline. Every Sunday I break down what actually moved markets, what it means for your money, and the unique angles most people miss. So before I start, subscribe and hit the bell right now. Next week, the Fed meets for the first time under a brand new chair, and that press conference could move everything. You will want to be here for that breakdown. Now let's break down this week. So SpaceX went public Friday. The ticker symbol is SPCX. IPO price was $135 and stocks start trading at $150, spiked 30% intraday, and it closed at $160. It is a 19% gain on day one. The scale of this is hard to process. Some of you might remember Saudi Aramco held the IPO record since 2019. They raised $25.6 billion and SpaceX raised $75 billion. It is more than double the all-time record, only in one day. At the opening bell, Elon Musk said something very interesting. He said, "I gave SpaceX less than a 10% chance of succeeding at all. The company he expected to fail just made him the world's first trillionaire." There is something almost absurd about that. But here is where I'm going to say something that goes against the grain. I think most people watching this IPO are about to make a mistake. At $160 a share, SpaceX is valued at $2 trillion. Nvidia, which printed $82 billion in revenue last quarter alone, is worth nearly $5 trillion. So SpaceX on one day is already priced at nearly half of Nvidia for a company that posted $4.9 billion net loss in 2025. That's the part everyone glossed over. So yes, Starlink is genuinely profitable, $11.4 billion in revenue, solid margins. But the rocket division loses money. The XAI division, which includes Grok and X, burned through billions. Starlink is essentially carrying the whole company. So when you hear SpaceX is profitable, that means only one division out of three makes money. Analysts targets run from $63 on the low end. Morningstar's fundamental valuation to $227 on the high. That spread alone tells you nobody knows what this is actually worth. The average is $164. It is basically where it already closed on Friday. The people who made money were allocated at $135. If you are looking at $160+ right now, that trade already happened without you. So I wouldn't chase it. I would like to watch the first earnings report. I believe there will be better entry later on. So SpaceX is the exciting story, but here is the thing that actually scares me about this market right now. And it has nothing to do with rockets. On Wednesday, the May inflation number dropped. It is 4.2% year over year. So that number is the highest in 3 years. I know what you're thinking right now. We have seen high inflations before. When Fed raises rates, inflation cools down. But this time is different. And the difference matters for how you position yourself the rest of 2026. In 2022, inflation was a demand problem. There was too much money, broken supply chains. So rate hikes work against that. But disinflation is supply problem driven entirely by war. Energy is up 23.5% year over year. Gas went from $2.98 a gallon in February to $4.15 by June. That's a 39% increase in 3 months. It is not because people are spending more, but because Strait of Hormuz, carrying 20% of the world's oil, got shut down. The Fed cannot fix this. You cannot rate hike your way out of a war. Currently, the Fed is being asked to control a fire with a hammer, which is what makes next week genuinely important. The Fed meets June 16 and 17. Kevin Warsh's very first meeting as a chair. He was sworn in 3 weeks ago, replacing Powell after the most divisive Fed confirmation vote in history. He walks in 4.2% inflation, an oil war, and a bond market already pricing in rate hikes by year end. So nobody expects a rate move. There is 96% chance of a hold. But what Warsh says in that press conference is everything. If there is one hawkish sentence and tech sells off, one sign of hesitation and the dollar slides, the decision is almost irrelevant. So you better mark next Wednesday in your calendar. So the broader point, at the start of 2026, markets were pricing in rate cuts. Now they are pricing in potential hikes. A complete reversal in 6 months. That is the slow-moving force quietly grinding down growth stocks all year. Not any single earnings miss. Most people still haven't connected these dots. And now here is where I think the crowd is making the biggest error of the week. And it is about the Iran peace deal. The conclusion isn't what you would expect. So Friday, Pakistan announced the US and Iran agreed on the final text of a peace deal. Markets jumped, oil dropped. Between that and SpaceX, the mood was almost euphoric. And here is what I think everyone is missing. Even if this deal holds, and that's a big if given how many times talks have broken down, oil market analysts estimate 3 to 6 months for supply to fully normalize. All tankers have to reposition, production facilities need to restart. Shipping insurance for the region essentially collapsed and has to come back. You cannot flip a switch and get 20% of global oil supply flowing overnight. So my read is the market on Friday was pricing in the signing of the deal as if it were the resolution of the problem. Those are two completely different things. One is a piece of paper, the other is month of slow normalization. Inflation doesn't disappear the day it is signed. The Fed doesn't pivot the day it is signed. And if talks break down again, oil spikes instantly. So this is a not resolved situation. It is a situation that got slightly less bad on Friday. So what we can do with this? Energy stocks had a massive run on elevated oil. If peace holds and oil drifts back to $75-80, a lot of that premium unwinds. I wouldn't be adding to energy here. Defense is different. RTX, Lockheed, Northrop. Defense budgets don't shrink after conflicts end. Every country that watched this play out is now spending more. That's a multi-year structural story. One peace deal does not reverse. And then there is the rotation nobody talk about because SpaceX stole the headlines. While all of this was happening, Coca-Cola hit an all-time high. Almost nobody realized that. Also TJX hit an all-time high. So you can see here, institutional money quietly moved into companies that make money regardless of wars, rate hikes, or AI hype cycles. When I see that rotation happening in the background, I pay close attention because that is not retail reacting to headlines. That is obviously smart money repositioning, only if you can see. So the one thing most people got wrong this week. This week felt good. SpaceX launched, market closed green. Peace deal dropped. A lot of portfolios looked fine Friday afternoon. But everything positive this week was built on hope. There's no confirmation yet. I hope the Iran deal holds. I hope inflation peaks here. I hope war sounds calm Wednesday. But not one of those things is confirmed yet. Markets can run on hope for a while. But during these times, that's usually exactly the wrong moment to add risk. So you better stay sharp, wait for the confirmation, and keep watching where quiet money actually going. This week, while everyone celebrated SpaceX, the quiet money was buying Coca-Cola. So you better pay attention to that. So that was all for this week. I would recommend you to subscribe if you haven't. Next week is gonna be very important. So there's gonna be Fed meeting, Warsh's first press conference, and we will see if this peace deal holds. So see you next week.